Welcome back, everybody, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. I got a lot to cover today. I've been away for a couple of days. I'm getting back in the swing of things. There's so much going on. We got this going on. We're going to be talking about that in a minute. There's a new experience that's taken across. You'll probably notice it, that we're adding a new way to attend. I'll talk about that in a few minutes. But the big news today, I want to share that first. And we're going to be going over more of this on my AMA tonight, and I'll talk about that too. But let me share my screen. And we won't start there, but we're going to come back to the event in a minute. But let me first start with the big news. The big news. Okay. Fed raises the rates by another 0.75%. Everybody's reacting to it right now. There was rumors of it's 0.75%, maybe a full percent. There was a presser that was done by Jerome Powell, who's in charge of this. All kinds of numbers shuffling going on. Like it's what they say, the deck chairs on the Titanic. It's just, the dollar is sinking. The dollar is garbage. We talk about that a lot. They can't control inflation. There was a clear statement in there, and it was so funny because he said, well, we think by 2025 we're going to have it at 2% for inflation. But he also, half his question was like, well, we're not sure. Like, when is this going to be? They were asking timing, like, when can we ease this off, or when can we back away from raising rates, or what's the plan in the next 6 months? He said, I'm not sure. So when you keep saying I'm not sure, I don't trust your 3-year forecast. It's kind of like in business when they give what they call a pro forma, which is like, here's what we're going to make for the next 3 years. That's a wish list. I mean, show me actual sales. Well, they have a wish list of saying, hey, we're trying to get to 2% inflation. Well, we're going to get there in 3 years. Can't tell you how, but we're going to get there. So the whole world's reacting to this. Markets went down and up. It was crazy all afternoon. But I just want to go over some things, just some highlights, and some talk about what, the AMA tonight. I'll probably pause here in the middle, talk about that. But there's a lot to go over. So let me first talk about the rate hike. So the rate hike, easy for me to say, 75 basis points, which means 0.75%. And that's considered hawkish. They say that's going to be higher for longer, which means they're going to keep raising rates. So what does that mean? How do the markets react? Well, a lot of people said that seems to be the new normal, 4 to 5% inflation rate. And 4 to 5% inflation is like the core number, which we all know isn't right. And that's the smaller part of the CPI index, which is another false number. None of these, all these numbers are just like, they can make numbers lie. Okay, they can just pick numbers, and it's like, well, if you exclude energy and food and utilities and gas, then inflation is like 3%. Well, okay, that's great, but we have to all pay for those things. So why do you exclude those? So, and then of course you go to shadowstats.com and see what the real inflation rate is. And when the CPI says it's 8.5, it's really like 17 to 21. It's crazy. We'll talk about that in a minute. But here's how the interest rates, the 2-year and the 10-year interest rate yields, they pretty much talk to how people are looking at the borrowing money, short-term, long-term, and also it ties to real estate and mortgages. 2-year Treasury, huge increase. It went up to 4%. Okay, so the highest number since 2007. 2008 is when we had a pop. But yeah, they try to raise rates, like a few years ago, and then President number 45 said back off. They did, and then they had to crank it back up again, and they're raising it again. Not looking good. So how did real estate react? Let's take a look at real estate. So real estate, U.S. existing home sales sink for 7th straight month. Okay. This left existing home sales down almost 20% year over year. So real estate is taking a hit. Jerome Powell in this speech said real estate is going to have to, they're going to have to take a haircut. They said that real estate has to come down. There's going to be prices that will come down. He didn't say those exact words, but he definitely said that real estate, he sees prices declining in the real estate market. That's not good. And then mortgage rates are climbing up. They soar above 6%. I'm hearing now they're getting closer to 7%, which is the numbers I was used to when I was a real estate investor, but which isn't crazy. But what has happened? Let me drop out of sharing for a moment and talk about this. Then I'll share about a couple other things. So it's not, real estate's near and dear to my heart. Okay, here's what they've done in the last few years. They've dropped rates artificially low, 6%, 7%. That was kind of normal for a long time. Okay, I know we had high rates back in the 80s, but for the most part, in the prosperous times in the 90s and early 2000s, mortgage rates were around 6-7%. But what they did is, after like they had like the banks almost went belly up, the global financial correction in 2008, where two Lehman Brothers, too big to fail. They changed things and they just dropped the rates. They've been dropping, and they made them low. So now people entering the real estate market in the last 10 years think like, oh, I should be able to afford a house at 3%, 4% interest rates. And some people have, and that's fantastic for them. But if you're trying to get a house now and your expectations were a 3% mortgage, well, 3% mortgage is about, it's a 6% mortgage is about 50% more, 50% in payments than a 3% mortgage. Like the old rule of thumb was like 6 is 6, 7.5 is 7. So every 1.5% move was a $100 change for every $1,000 you borrowed. So that's where 6 is 6. 6% would be $600 if you had a $100,000 house. 200,000, you just double it, and so on. So 7.5 would be 7. 4.5 would be 5. It moves every 1.5. 3% would be 4. So you'd be paying $400 per $100,000 house for your mortgage and interest, your principal and interest. But you'd be paying $600 at 6%. So it's 50% more. So you move from 3% to 6%. It's a 50% increase. That's sticker shock for a lot of people. And people now realize that their wages did not keep up with real estate prices and inflation. And now they can't get into the real estate market. So that's really hitting home now. And that's why they're saying that real estate prices have to take a haircut, because people that the payments are 50% higher, they can't afford the houses. So the prices must come down. That's what they're saying. So let me go back and start sharing one more time and go into some more details. And I don't know why the coloring is weird today, but I'll work that out. I'm not really this orange. I don't get it, but I'll work that out. Okay, continuing on. So I'm still sharing here. It's kind of weird. Let's see. I'll fix the coloring later. Anyway, that's just me being a perfectionist. Okay, now let's talk about gas. All right, so we got fuel. U.S. gas prices ended a record losing streak as the end of the SPR drain looms. The SPR, I'm going to roll that down here, Strategic Midterm Reserve, Strategic Petroleum Reserve. That's what the SPR. This graph is what I wanted to show you. So the last 3 or 4 months, they've been just taking oil. Here, let me highlight, So the net result was a nationwide crude draw of almost 6 million barrels in last week. And I think I said so 6 million barrels last week. That's basically 1 million barrels a day. That's what the numbers basically have been saying. 1 million barrels a day. If the barrel is $100, it's $100 million that they're injecting into the economy to keep the gas price artificially down. And you see right here that this is causing a big dip in our petroleum reserve. The lowest number, I can't even see how low, it's like 30 years, maybe 40 years. Lowest amount of oil we have in a strategic petroleum reserve, which is our emergency reserve. If the world goes haywire and we can't get oil or petroleum for whatever reason, we want to have a reserve. Now, our last president, when oil virtually went negative for a little while because of the markets were weird, he loaded up. He just loaded up on our oil and said, yeah, let's get as much as we can. Well, now we've been draining it out to make the economy look better, which isn't an economy, it's a financial system. And just injecting more oil in there and artificially driving down the price that you're paying at the pump. Inflation. Let me talk about international inflation now. So the geopolitics of inflation, and highlighting this article, and I used a lot of recent zero hedge stuff because it's easy to just. Pardon me there. All right, I'm actually waiting for it to see if Dylan and Patrick give me a couple updates while I'm talking here. But this one, okay, so the global view of inflation. And I'll get to Argentina in a moment, but here's an example of like the dollar being so strong, what it means to other countries. Take Japan as an example. The yen has weakened 20% against the dollar. I don't know the time frame, but let's call it this year. That means every commodity priced in US dollars is 20% higher in price for those using yen. Add in the increase in cost due to global scarcities, that it's a double whammy hit of inflation. So all these other countries, as the dollar goes up, what they call the Dixie, the DXY, the dollar, it's almost at record numbers again, which means every foreign currency is losing buying power against if they have to buy things in dollar. So what are other countries experiencing, and what are they doing? Well, first off, Argentina. I have to mention Argentina because we're talking world inflation. They're out of control. And here's just a few articles that I found here, and I've opened one up. Inflation skyrockets to almost 80% year over year as crypto adoption grows. They're hiking up their interest rates, I believe, to 75% to compensate for 100% inflation. They're about to tank. They're about to lose total control. I would expect disruption by the masses against the government in some way, shape, or form. Choosing my words wisely here, but look for things to happen in Argentina soon, because you can't sustain that. That you're basically losing your buying power. What you could buy with $1 last year now takes $2. Your wages lose half their value. Your money loses, your currency, not your money. Your currency loses its buying power it's cut in half in a year. It's insane. So, what can we learn from so lastly, let's talk about gold and precious metals. What can we learn about the international gold market? Well, this article talked about in the next 10 years, it's very likely we'll be moving to a new gold standard. And okay, so let's see. So the world's largest hedge fund makes the ultimate case for gold. And I wanted to highlight a few things here. People want gold as a hedge against inflation to a degree, but that's not the only reason that they buy it, but it is a major one. More than 50 years after the U.S. did away with gold as a tether to the U.S. dollar, that's the 1971 Nixon pulling us off the gold standard. We're seeing the effects of all this. So anyway, so there's 4 reasons that they get gold, and one is it appears that both Russia and China, the relations with the West are nearing a low point. Russia tied the ruble to 5,000 rubles to a gram of gold. There's talk of the yuan doing the same thing. And then the tipping point for gold, my last story I'm going to share. So China and India in particular are loading up on physical gold. Bridgewater, I don't know who that is, probably a fund, join the party by buying more physical backed gold ETFs in China. Silver is being drained from the SLV ETF. That's a silver exchange traded fund. The LBMA falls, I believe that's the London Bank, and the COMEX futures. So basically, they're taking all the gold and silver out of the market. So they're sending the spot price up. It's just getting out of control. So everybody's trying to hedge against what's going on. This video is already getting a little bit long, so let me back out of here, just sum up. So this is why we're doing this event, okay? This is why we're doing it, okay? And I want to talk about how you can attend virtually in a moment too. But we're doing this event. Patrick and Dylan and I are doing this event because there's so much going on with crypto, real estate, inflation, gas, housing. I talked about real estate, gold, silver, crypto, all that stuff. And we're putting it all under one roof in one event. And we're hoping to announce some special attendees that are speaking. Haven't got full confirmation yet, but we're pretty close. So look for that in the next day or two, maybe this weekend. And like that's what we're doing. So let's talk about how you can attend virtually. And I'm going to share my screen one last time here. I'm going to jump to the beginning. So if you click here and you save your spot, notice on the top here, you can't attend in person. Virtual tickets are now on sale for $150. What do you get for that? You get a virtual ticket. You get a PDF of the workbook. You can't get the workbook that you're going to be there, but we will give you a PDF version of it. You get a live stream access to the event. We'll also give you a recording of the event. We'll also record stuff in case anything goes haywire with a live recording. We have you covered. Discounted VIP access to future events. Anyone who gets a virtual ticket will get a discount to be a VIP to join us as well there. At a future event. So you get that access to a private Telegram, and there'll also be a special AMA that we do. We have to add that to the site and mention that particularly. But since you can't attend live and ask questions or interact with us, we will make a special AMA for anyone who attends the event live or virtually to ask follow-on questions from Dylan, myself, or Patrick. Okay. Lastly, I wanted to mention that I have, let me drop out of here one last time, take a breath. I've been talking a lot quickly because I have a lot to say, but I have to back out to make the lighting weird. Okay, that goes weird. Okay, all right. So last thing I want to say, there's an AMA tonight where we can talk about all these things. There's an AMA only for Patreons though. And I want to tell you that if you join at the $39 level or higher, but that $39 level is going away at the end of this month because come Texas, it will be $99 to join to be at the twice a month AMA and getting the articles from our group. So we will talk about that at the event in Texas for sure. But there's a discount way to get into it now. If you're early adopters with us, it's It's a limited event for Patreons. If you want to join, that's there now. But the price is going up. If you're been wavering on the joining it, but that's the AMA tonight. You only get the AMA information on my Patreon, and that price will go up in 2 weeks when we're in Dallas in 2.5 weeks. So, lots said today. I'm going to take a breath, close the drawer in the bureau, say follow leader one more time, and I hope to see you in Dallas. We'll talk soon. Take care.